So what we are going to learn today is concept of leverage or leverage. Please understand the meaning of leverage is nothing but risk. And we are going to measure this risk. A simple question. If there is a fixed cost or if there is a variable cost, which is more risky? I hope all of you are clear with the concept of fixed cost and variable cost. Which is more risky, fixed cost or variable cost? Fixed cost is more risky. It is always risky. Try to understand. Suppose I run a coaching classes of chartered accountancy. I want to hire a faculty of say accounts. I hire him saying, I will pay you 1 lakh rupees per month. Or I hire him in this manner. I will pay you 2000 rupees per student. Forget about which is beneficial for him and which is beneficial for me. I am talking right now about risk. If I am paying him 1 lakh rupees per month and there are only 5 students who are paying 5000 rupees, so my revenue will be 25,000 and my cost will be 1 lakh and I'll end up making losses. But if I had gone for variable cost, there are only 5 students who will pay me 5,000. So I will be getting 25,000. But my cost on other end will be only 2,000 into 5, which will be 10,000. So I will be still earning profits because I had gone for a lesser riskier option. I am not saying always this is beneficial. What I am trying to say is, if you want to measure risk, you are practically measuring fixed cost. Fixed cost is nothing but risk. Sir, we have understood debt is a risk. Why debt is a risk? Debt ultimately results into interest, and interest is a financial fixed cost. As the financial fixed cost is increasing, the risk of the company is increasing. Practically, we are going to measure fixed cost. Let us go to our operating profitability statement. We start with, suppose, sales. My sales for 1 year is 1 lakh rupees. This is 1 year figure. Understand the concept of PV ratio or contribution margin ratio, or even it is termed as contribution ratio. Please understand, in previous chapter also we have done this. Sales minus variable cost. Now this is a company where variable cost is always 40% of sales. See, variable cost is always variable to number of students, to number of units sold. So variable cost is always dependent upon sales. It is always 40% of sales in my business, and the resultant answer is contribution. What will be contribution in this case? 60,000. I have told you in the chapter of capital structure why this is termed as contribution and not profit. Because fixed cost is yet to be deducted. Try to understand the full name of this contribution. It is a contribution towards a fixed cost. So what will be covering from this 60,000? First, we will be covering fixed cost. And then towards a profit. but it is very difficult to take this type of name. You cannot take it as say it is contribution towards a fixed cost and then profit. So in short, we term it as contribution. Try to understand what is PV ratio. PV ratio or contribution margin ratio or contribution ratio is nothing but contribution upon sales into 100. It is contribution upon sales into 100. What is contribution in this case? 60,000. What is sales in our case? 1 lakh multiplied by 100 is nothing but 60%. What is understanding of PV ratio? Very simple. Your contribution is 60% of your sales. So in my company, say I am manufacturing this pen. In my company, contribution margin ratio or PV ratio is 20%. What does it mean? If my sales is 100, my variable cost will be 80 and my contribution will be 20. This is PV ratio of 20%. It depends what you are talking about. When you say PV ratio, you are talking about how much percentage you will be earning contribution as compared to your sales. So what is PV ratio in our case? Is nothing but 60%. Please understand even this. There is only sometimes use variable cost ratio, which is 40%, which I have written over here. It is nothing but variable cost divided by sales into 100. What does it mean? Variable cost is 40% of sales. It is variable cost ratio. And variable cost ratio is always 100 minus PV ratio. See, in this case, 100 minus PV ratio is 60, so variable cost ratio will be 40. So we are on the upper part of this particular profitability statement. From contribution, what is first to be deducted? Fixed cost. Which fixed cost? Right now we are talking only about operating fixed cost. Salary, if it is fixed, everything which is operating fixed cost. We are not talking about interest on bank loan. We are not talking about interest on debentures. We are not talking about dividend on equity shares or preference shares. We are talking only about operating fixed cost. And operating fixed cost for this company is 40,000. What we get, this is from where we start our chapter of capital structure. This is 20,000, which is operating profit, which we also term it as EBIT, earning before interest and taxes. So this is our operating profit. This is our profitability statement for 1 year. And someone is saying that do you take operating risk? See, what is the question which is asked to me? Do you take operating risk? My answer is yes. Why? Because I am having operating fixed cost. And as we have proved that fixed cost is equal to risk. So I am having one risk, which is fixed cost. But I want to measure it technically. So we are going into first heading. I am measuring my operating risk. What is risk in technical word known as? Leverage. Degree of operating leverage, which in short is termed as DOL. What is a degree of operating leverage? Very simple. How to find out the degree of operating leverage? Very simple. It is nothing but contribution upon EBIT. It is contribution upon EBIT. What is contribution in our case? 60,000. What is EBIT in our case? 20,000. Contribution 60,000, EBIT 20,000, degree of operating leverage is 3. Degree of operating leverage is 3. 3 centimeter, kilogram, units, nothing. You can write down 3 times. I will also explain you why you can write down 3 times. But you can write just 3. What is my degree of operating leverage? 3. What is my operating risk? 3. Right now, it does not make any sense. Whether it is higher, whether it is lower, it does not make any sense. But understand, it will make sense in 10 or 15 minutes when I explain you what is the meaning of degree of operating leverage. Also, one thing is very interesting. I told you when it is operating leverage, leverage is risk and risk is fixed cost. And there is no fixed cost in formula. It is contribution, EBIT. So fixed cost is not becoming part of our formula, but still I am saying it is measurement of fixed cost. It is measurement of, it is degree of operating leverage. It is measurement of operating risk. Try to understand, I am taking an Excel sheet. I am feeding up the same figures which I have taken over here. What was our contribution margin ratio? 40%. What is variable cost ratio? 60%. Contribution margin ratio is same as PV ratio. So PV ratio is 40%. Variable cost ratio is 60%. Fixed operating cost. But we have taken fixed operating cost 40,000. So fixed operating cost is 40,000. Sales we have taken 1 lakhs. So let me take 1 lakh over here. Okay, variable cost ratio is 40% and contribution margin ratio is 60%. I am getting degree of operating leverage 3. Let me just find out and verify whether you are getting it or not. Sales is 1 lakh. Variable cost will be 40,000 because variable cost ratio is 40,000. Contribution will be sales minus variable cost will be 60,000. Fixed cost is 40,000. EBIT is 20,000. What is degree of operating leverage? It is contribution upon EBIT, and hence it will be contribution is 60,000. This is 20,000 and answer will be 3. That we have already calculated, which is degree of operating leverage 3. Try to concentrate. What does a degree of operating leverage means? Degree of operating leverage says, if from this stage, after completion of 1 year, if my contribution will increase 1 time, then my profit EBIT will increase 3 times. What does it also means? If my contribution increases 10%, then my EBIT will increase 30%. And believe me, this everything is happening because of fixed cost. If every cost was variable, this would never happen. I'll take an example by taking fixed cost 0. Or if contribution increases 100%, my EBIT increases 300%. This is the meaning of degree of operating leverage 3. If my contribution increases 1 time, my profit should increase 1 time, but because it will increase 3 times because I am taking higher risk, because I am taking more risk. Why this happens? This happens because of fixed cost. This also I will prove. But try to understand. Let me first prove this. If contribution increases 10%, what is my current contribution? 60,000. How it will increase 10%? My contribution will become 66,000. Let me write it down over here on. If my contribution increases by 10%, what is my current contribution? 60,000. Then what will be my contribution? 66,000. All of you understand, right? 10% increase in 60,000 is 60,000 plus 10%, which is 66,000. So this will be my new contribution. My fixed cost, this is the nature of fixed cost. Whether your sales increases, decreases, whether your sales becomes zero, your fixed cost is going to remain same. What is your fixed cost? Your fixed cost is 40,000. What is EBIT? 16,000. What was previous EBIT? 26,000. What was previous EBIT? 20,000. Contribution has increased by 10%, but EBIT has increased by rupees 6,000, but we are not talking right now about rupees. We are talking in percentage terms. So how much EBIT has increased? 6,000 divided by 20,000 multiplied by 100. This is nothing but 30%. So I have verified this. Yes, if my contribution increases 10%, my EBIT increases 30%. Let me also prove this. If my contribution increases 100%, contribution currently is 60,000, proposed increase by 100%. What is increased by 100%? It will become 1,20,000, right? Minus fixed cost. Whatever is your sales, whatever is your contribution, your fixed cost is going to remain same. So your EBIT will be 20,000. In this case, EBIT will be 80,000. How much EBIT has increased? Rupees 60,000. In percentage terms, increase divided by base multiplied by 100. How much it has increased? 60,000. What is the base? 20,000 multiplied by 100, which is 300%. How much contribution has increased? 100%. Then my EBIT has increased by 300%. This is what degree of operating leverage 3 means. If my contribution increases 1 time, then my EBIT will increase 3 times. It is as simple as this. My point is only this. So it is good if I am having degree of operating leverage 10. If my contribution will increase 1 time, my EBIT will increase 10 times. So if my contribution is increasing 10%, my EBIT will be double. It will be increasing by 100%. So it is good. Why then this degree of operating leverage is termed as measurement of risk? I have told you measurement of return. If your contribution increases 1 time, it is good. Your EBIT will increase 3 times. Then how it is measurement of risk? Try to concentrate. Anyone who wants to give the answer? Yes, Shabina. In chat also it is a correct answer. Yes?
But if it will decrease by 1 time,
Exactly. It also means that if contribution decreases by 10%, EBIT will decrease by 30%. Assume your DOL was 10. You are having very high fixed cost. That means if your contribution decreases by 10%, your EBIT will become 0. It will decrease by 100%. It also means if your contribution decreases by 100%, your EBIT decreases by 300%. And as far as measurement is concerned, we are talking only about this. Degree of operating leverage never measures the return, it always measures the risk. So higher the degree of operating leverage, higher is the risk. And never say it is bad. I am not saying DOL of 10 is bad. If R is greater than KE, you are having a favorable leverage to take more and more risk. My point is that it is higher risky. As good as this, degree of operating leverage 3 and degree of operating leverage 10, I can say a company which is having DOL of 10 is higher risky as compared to a company which is having DOL of 3. You should never write down DOL of 10 is bad. Right? It depends upon situation to situation whether DOL of 10 is bad or not. This is degree of operating leverage. Try to understand one more thing. We have understood if my contribution increases by 10%, what was our original figure? Sales was 1 lakh rupees. Variable cost was 40,000 and contribution was 60,000. Try to understand. If sales increases by 10%, my company is doing well marketing, good marketing, and the sales has increased by 10%. What will be my new sales? 1,10,000. Believe me, variable cost will not remain 40,000. It will increase. It will increase exactly by 10%. Or you can do 40% of 1,10,000, which is 44,000. What is my new contribution is 66,000. Believe me, if sales increases by 10%, contribution also increases by 10%. If sales increases by 20%, sales increases by 20%. Let us do it. 1,20,000. This will be 48,000. This will be 72,000. Then contribution also increases 20%. Hence, I am proving it. Percentage change in contribution is equal to percentage change in sales. Because variable cost is variable. There is no other reason, because variable cost is variable. So percentage change in sales is always equal to percentage change in contribution. Percentage change in sales is always equal to percentage change in contribution. So let me also write down over here. What does degree of operating leverage 3 means? If contribution or sales increases one time, or sales increases 100 times, then my EBIT will increase 3 times. Percentage change in contribution is same as percentage change in sales. The answer will be same. Let me have some idea over here. It is the same question. My sales is 1 lakh, variable cost is 40,000, contribution is 60,000, fixed cost is 40,000 and EBIT is 20,000 currently with a degree of operating leverage 3. I am increasing my sales by 20%. So sales is 1 lakh. I am making it 1,20,000. See how much my sales have increased. How much my sales have increased? 20%. It is automatically calculated. How you can calculate it? 1,20,000 minus 1 lakh, which is 20,000, divided by 1 lakh multiplied by 100. That is, the sales has changed by 20%. What is percentage change? Even in variable cost is 20%. What is percentage change in contribution is also 20%. And percentage change in EBIT is 60%. Try to understand. EBIT is changing by 60% and sales is changing only by 20%. Is the degree of operating leverage 3 correct? The answer is yes. Why? If sales increases by 20%, EBIT should increase by 60% because DOL is 3. Let us do if sales decreases by 50%. Here I can directly do it. If your sales is currently 1 lakh, it decreases by 50%, it will become 50,000. See the percentage change in sales, negative side 50%. If sales decreases by 50%, see the percentage change in EBIT, it is negative 150. If sales decreases by 50%, EBIT is decreasing by 150% because DOL is 3. Last time, I am taking sales is decreasing by 100, let me not take 100%. If the sales is increasing by 100%, let me make this 2 lakhs. I hope all of you are clear with this, that how that percentage change work. If the sales is increasing by 100%, what does that mean is your 1 lakh rupees sales becomes 2 lakh. See, your 40,000 variable cost is becoming 80,000. Your 60,000 contribution is becoming 1,20,000. So percentage change of this 3 is always same. If sales has increased by 100%, then EBIT has increased by 300% because DOL is 3. Say this. Right. But I have taken this Excel sheet so that we don't have to calculate. We can prove n numbers of cases. Tell me, if the sales will decrease by 20%, what will happen to EBIT if the sales will decrease by 20%? EBIT will decrease by 60%. Can you tell me, Kushali, if the sales decreases by 20%, what will be the new sales? What amount of sales I should write down?
80,000.
80,000, yes. And let us verify your answer. It is correct. The sales will decrease by 60% if the EBIT will decrease by 60% if sales decreases by 20%, EBIT will decreases by 60%. All right. Here comes new formula for a degree of operating leverage. Try to see this Excel sheet. We are having DOL of 3. Can we do this and find out the answer? Let me take increase in sales of 50%. So 1,50,000. 20%. 1,20,000. The sales has increased by 20% and my EBIT has increased by 60%. So if I want to find out DOL of 3, I can take this figure. if I want to find out DOL of 3, I can take this figure. What is this? First understand. Percentage change in EBIT divided by, I can take this figure. Percentage change in contribution. Let me find out the answer. Percentage change in EBIT is 16. Percentage change in contribution is 20. Answer is 3. So here comes a new formula for degree of operating leverage. Degree of operating leverage can be found out, number 1, by contribution upon EBIT, or percentage change in EBIT. EBIT comes in numerator upon percentage change in contribution. All of you also agree that percentage change in contribution is the same as a percentage change in sales. Percentage change in contribution, you can always write down, instead of percentage change in contribution, you can always write down percentage change in sales, because they both will be absolutely same. So here comes 3 formulas for degree of operating leverage. Also understanding of degree of operating leverage. Try to understand if DOL is a 5. What does it mean? If sales increases 1 time, your EBIT increases 5 times. This is understanding of DOL. I told you I will also explain you if my fixed cost is 0. Let us go to that chart. If my fixed operating cost is 0, see the changes which will happen in DOL. The DOL will become 1. If a fixed cost is 0, understand, sales minus contribution, sales minus variable cost is, say, contribution, which is 50,000. If a fixed cost is 0, my EBIT will be equal to contribution always, if fixed cost is 0. What will be DOL? It will be contribution upon EBIT, which is 50,000 divided by 50,000, which is 1. Try to interpret DOL of 1. DOL of 1 basically means no risk, or it also means no fixed cost. So our measurement starts with 1. Our measurement starts with 1. So if DOL is 2, then fixed cost will be half of contribution. We can do that. But understand, this is nothing but degree of operating leverage 1. Basically means it is fixed cost. Now try to understand. Let us try and increase this fixed cost. A fixed cost becomes, say, 25,000. What will be EBIT? 25,000. What will be degree of operating leverage in that case? 2. See, as you are increasing the fixed cost, DOL is increasing. Let me make a fixed cost as 40,000. What will be my EBIT? EBIT will be 10,000. What will be degree of operating leverage? 50,000 divided by 10,000 will be 5. What was fixed cost over here? 40,000. What was fixed cost over here? 25,000. What was fixed cost over here? 0. Are you getting it? Fixed cost is increasing, DOL is increasing, and hence DOL is measurement of fixed cost, which is nothing but risk. And so we conclude degree of operating leverage, even if the formula is not having fixed cost. It is measurement of fixed cost. Higher the fixed cost, higher will be degree of operating leverage. This should be the end of operating leverage. Three formulas: contribution divided by EBIT or percentage change. Whenever you write down percentage change, this EBIT which was in denominator will come in numerator, and the contribution which was in numerator will come in denominator. Let us go to degree of financial leverage. Ultimately, it will measure your financial risk. What is your financial risk? We already know it is interest. Interest is a fixed financial cost. And understand, we are in the subject of financial management. So technically we should be taught only degree of financial leverage, but we are also taught degree of operating leverage. In financial leverage, we start with EBIT. Say EBIT is 1 lakh. It is not sales, it is EBIT. EBIT is say 1 lakh minus interest is say 60,000. Let me take another type of figure. 20,000. Then my EBT, earning before tax, is nothing but 80,000. What is, let me take a figure which interest is 60,000. EBT is 40,000. How to find out a degree of financial leverage? First, understand the formula. Very easy. EBIT upon EBT. Degree of financial leverage is EBIT upon EBT. What is EBIT? 1 lakh. What is EBT? 40,000. What will be the answer? It is 100 divided by 40, 2.5. Don't write down percentage. If you want, you can write down times, otherwise you should keep 2.5 as it is. Degree of financial leverage is 2.5. What does this mean? It means the same thing what operating leverage was there. If your operating profit, what is operating profit is nothing but EBIT. If EBIT increases 1 time, then your EBT will increase 2.5 times. If degree of financial leverage is 2.5. What does it also means? If operating profit or EBIT will increase 10%, then EBT will increase 25%. How to find out this percentage? I'll tell you. How much EBIT is increasing? 10%. What is degree of financial leverage? 2.5. This will be 25%. So it is the same repetition as we have done in degree of operating leverage. So I'm not going somewhat in deep, and we are directly going to our Excel sheet in degree of financial leverage. If my EBIT is say 1 lakh, let me start with 1 lakh only. And my fixed financial interest cost, that is interest, is say 40,000. Sorry, we have taken 60,000, right? Let me take 60,000. Then What will be degree of financial leverage? We have understood it will be 2.5. Here I have calculated a tax and everything, but let us forget right now tax and everything. This is nothing but degree of operating leverage 2.5. What does it mean? If EBIT increases one time, my EBT will increase 2.5 times, the same way in decrease. Let me verify. If my EBIT increases 10%, if EBIT increases 10%, I am increasing EBIT by 10%, that is 1,10,000. 1 lakh EBIT, increase of 10% is 1,10,000. See this. How much EBIT has increased? 10%. How much EBT has increased? 25%. So our understanding is correct. EBT will increase by 25%. How we have got 25%? It is a 10 into 2.5. Number 2. If EBIT decreases by 5%, EBT will decrease. Anyone who can tell me how much it will decrease? If EBIT decreases by 5% and my DOL is 2.5. No one. 12.5. How you can find out? Easy. It is decreasing by 5 and your DOL is 2.5. So it will decrease by 12.5%. Let me decrease my EBIT by 5%. How I can decrease my EBIT by 5%? 1 lakh minus 5%. 1 lakh minus 5% is 95,000. So let me write down over here 95,000. If I write down 95,000, you can see my EBIT is decreasing by 5%, but my EBT is decreasing by 12.5%. I am making one more formula of DOL. What is percentage change in EBT? First I am taking this. It is minus 12.5%. What is a percentage change in EBIT divided by percentage change in EBIT? It is minus 5%. Minus minus gets cancelled, percentage get cancelled. This is 2.5. So you can also solve DOL by your understanding. We can rewrite the formula by understanding. Try to concentrate. What can be the formula for DFL? One is EBIT divided by EBT. Also, it can be written as DFL is percentage change in EBT divided by percentage change in EBIT. Because this is our understanding. If DOL is 2, EBIT increases 1 time, then EBT will increase 2 times. So this is our understanding which we have converted into formula. Percentage change in EBT and percentage change in EBIT. So this is our second formula for DFL. Try to concentrate. We are talking about this numerator which is percentage change in EBT. Believe me, percentage change in EBT is always equal to percentage change in EAT. I am not talking figures will be same. I am talking percentage change will be same. Is also equal to percentage change in EPS. EPS will also, the percentage change in EPS will be same as percentage change in EAT will be same as percentage change in EBT. Let me prove it again in this Excel sheet. Let me first rub some. What is degree of financial leverage in our clause? 2.5. If my EBIT increases by 10%, it should become 1,10,000. See, how much EBIT is increasing? 10%. How much EBT should increase? 25%. What is the percentage change in EBT? 25%. What is the percentage change in EAT? 25%. What is the percentage change in EPS? 25%. See, EPS was 24, it has become 30. 30 minus 24, 6 divided by 24 multiplied by 100 is nothing but 25%. How I have found out percentage change? If someone is having a problem, I can do this. It is a 30 minus 24, which is 6 divided by 24 multiplied by 100. This is percentage change. Percentage change in EPS is equal, EAT is equal to EBT is equal to EPS. So I have written it over here. Percentage change in EBT, percentage change in EAT and percentage change in EPS will be same. I am summarizing DOL. Try to concentrate. DFL. Degree of financial leverage will be equal to EBIT upon EBT, first formula. Or by logical formula also can be used, percentage change in EBT. Please understand, this was in denominator, but when you are writing down percentage change, it will come in numerator, divided by percentage change in EBIT. This formula I have derived from understanding. And please understand, I can make 3 more formulas. In this numerator, instead of percentage change in EBT, I can write down only in numerator. I can write down percentage change in EAT. You agree? Yes. Because percentage change in EBT and percentage change in EAT will be same. I can also write down percentage change in EPS. And this will increase our understanding. Try to concentrate. What does, suppose X Limited is having DFL of 5. See, what does this mean? If operating income increases or decreases one time, then my EPS will increase or decrease 5 times. No one in the company is concerned with EBT, but everyone in the company is concerned with EPS. So here it becomes more logical. If my operating income will increase 10%, my EPS will increase 50%. If my operating income will decrease by 10%, my EPS will decrease by 50%, and so only DOL as well as DFL are measurement of risk. So practically I have written 2 formulas, but I can use this in numerator, I can use this in numerator. So technically there are 4 formulas of degree of financial leverage. Those who are not getting it, I can use this also, I can use this also. Or I can use this also, percentage change in EPS divided by percentage change in EBIT. Alright, but if EBIT and EBT is available, it is always advisable to find out by this formula. Alright, because it becomes easy. Let us go to next concept, which is third concept. Degree of combined leverage. It is just mixture of operating and financial leverage, and it is telling you the answer of combined leverage. I am starting with sales. Sales is 1 lakh with a variable cost of 40,000. So contribution is 60,000. minus fixed cost is 40,000. So EBIT or operating profit is 20,000. My interest is 15,000, and so my EBT is 5,000. How to find out the degree of operating leverage? Contribution upon EBIT. Degree of operating leverage will be 3. How to find out the degree of financial leverage? EBIT upon EBT, that is 20,000 divided by 5,000. Degree of financial leverage is 4. What is degree of combined leverage? Very simple. Degree of combined leverage is nothing but contribution divided by EBT. It is contribution divided by EBT, which is 60,000 divided by 5,000, which is 12. What it will measure, that we will come ahead. But first formula for degree of combined leverage is contribution upon EBT. And it is coming 12. How it can be even found out, try to understand. What is degree of operating leverage? Degree of operating leverage is contribution upon EBIT. What is degree of financial leverage? It is nothing but EBIT upon EBT. I want contribution upon EBT. If I multiply this both, EBIT gets cancelled. Answer will be contribution upon EBT, which is nothing but degree of combined leverage. Here comes the second formula. Degree of combined leverage. What is first formula? Contribution divided by EBT. Second formula, degree of operating leverage multiplied by degree of financial leverage. Both combined, I'll be getting the answer. Third, degree of combined leverage. Now the understanding should be clear. What does degree of combined leverage 12 means? Try to concentrate. Degree of combined leverage 12. What does it mean? If contribution or sales increases by 10%, my EPS, EBT, EAT will increase by 120%. This is what it means. If contribution or sales increases by 10%, my EPS, EAT or even EBT will increase by how much? 120%. So if my sales increases by 10%, my EAT or EPS or EBT will increase by 120%. Let me put this in my Excel sheet and find out whether I am getting the similar type of answer or not. What is my contribution margin in our case? 40%. Variable cost 60%. Fixed operating cost 40,000. Interest 15,000. So let me change this. Interest is 15,000. Tax rate I have not taken, but you can assume any tax rate. Your answer is going to remain same. 40%, and number of shares are 1,000. Sales, what we have taken as sales? 1 lakh. $60,000, 40,000. Okay. Fixed operating cost. Variable cost ratio is 40%. And this is 60%. Am I getting degree of operating leverage 3? Yes. I am getting degree of financial leverage 4? Yes. Degree of combined leverage 4 into 3, 12? Yes. So the calculations are correct for the particular period one. See, this is also the question which normally student ask me. So degree of operating leverage is calculated when? Every day, every month, every year. Normally it is calculated every year, but you may calculate even monthly. My degree of operating leverage in current month was 4. So in next month, if my sales increases one time, my EBIT is going to increase 4 times. You can do it daily, you can do it monthly, you can do it yearly. All right. What does the degree of operating leverage we want to understand? We have fed this all data, and let us now prove this. If my sales increases the 10%, let me increase my sales by 10%, 1,10,000. What is the percentage increase in sales? 10%. What is the percentage increase in EPS? 120%. That was to be proved. What is percentage change in contribution? It will remain 10%. What is the percentage change in EBIT? It is 30% and it should be 30%. Why? Degree of operating leverage is 3. So if sales increases 10%, your EBIT should increase 30%. It is increasing 30%. And your EBT is also increasing 120%. Your EAT is also increasing 120%. Your EPS is also increasing 120% because the degree of combined leverage is practically 12. We can also prove degree of financial leverage. My EBIT is increasing by 30%. EBIT increasing by 30%. My EPS should increase by 30 into 4. 120%. EPS will increase by 120%. All these three things should be absolutely clear. Sir, what will be other formulas for degree of combined leverage? Very simple. 120% divided by 10%. Right? Is the answer 12? So I can take percentage change in EBT divided by percentage change in sales. Percentage change in EBT divided by percentage change in sales. Percentage change in EBT divided by percentage change in contribution. Percentage change in EAT divided by percentage change in sales. Percentage change in EAT divided by percentage change in contribution. I can take n numbers of combination. But let me write down degree of combined leverage, third formula in this manner. It is percentage change in. Try to understand, I always see my basic formula. What is in denominator will come in numerator. EBT divided by percentage change in. What is in numerator will come in denominator, which is contribution. Or in numerator, you can write down anything. Percentage change in EAT or percentage change in EPS. So in numerator, you can write down percentage change in EPS. It will be 120 in our case. Percentage change in EAT, it will be 120. Percentage change in EBT, it will be 120. Let me once again verify. Is everything 120 in my case? Yes. Percentage change in EBT is 120, EAT is 120, and EPS is also 120. So in numerator, I want 120. I can take anything. In denominator, you can take percentage change in contribution or percentage change in sales. You may use anything, because percentage change in contribution will also be 10% and percentage change in sales will also be 10%. So these are how many formulas? They are practically 6 formulas. You can use the percentage change in EBIT divided by percentage change in, percentage change in EBT divided by percentage change in sales. You can use a percentage change in EBT divided by percentage change in contribution. You can use a percentage change in EAT divided by percentage change in contribution, or percentage change in EAT divided by percentage change in sales. So there will be two. These are 6 formulas you can use to understand this. Ultimately, understand the degree of combined leverage 3. Say degree of combined leverage is 3. What does it mean? If sales increases or decreases one time, then your EPS will increase or decrease 3 times. And this is ultimate very clear understanding of degree of combined leverage. Let me draw a profitability statement. Sales minus variable cost is contribution minus fixed cost is EBIT minus interest is EBT. What is degree of operating leverage? Contribution divided by EBT. EBIT will be nothing but a degree of operating leverage. What is degree of financial leverage? EBIT upon EBT, degree of financial leverage. What will be degree of combined leverage? Contribution divided by EBT will be degree of combined leverage, or it can also be found out by DOL multiplied by DF. Right. Percentage change formulas are also very simple. You just need to change the numerator into denominator, denominator into numerator. Like what will be DOL? Another formula. DOL is a percentage change in EBIT upon percentage change in contribution. And now you should know percentage change in contribution is same as percentage change in sales, right? What is degree of financial leverage? Another formula. Degree of financial leverage is percentage change in EBT divided by percentage change in EBIT. Numerator is becoming denominator, denominator is becoming numerator. What will be another formula of degree of combined leverage is percentage change in EBT divided by percentage change in contribution. Now you should know percentage change in EBT, percentage change in EAT and percentage change in EPS is same. So you can use anything. You can use percentage change in EPS in numerator, you can use EBT in numerator, you can use EAT in numerator. And this chart should summarize all the formulas of leverage, all formula of leverage. Understanding should be clear. Degree of operating leverage, if percentage change in sales, it will give effect to percentage change in EBIT. Degree of financial leverage, percentage change in EBIT will give effect to percentage change in EBT. Degree of combined leverage, percentage change in sales will give effect to percentage change in EPS. And this is understanding of leverage, and all of you should be absolutely clear why it is measurement of risk. Because the understanding is okay that DFL3 means if the operating income increases by 1 time, my EBT is increased 3 times. But for the measurement, it is always measurement of risk and never measurement of return. This is degree of operating leverage, degree of financial leverage and degree of combined leverage.